From the floor of the CME Group, this is Danny Riley on today's closing print. You know what? Neither rain nor sleet nor hail can keep this S&P from going up. The S&P is closed higher now. We're just going to turn around here. Unreal. The S&P just popped up. The S&P is now closed up 14 out of the first 18 trading days of the year, or it's been up 12 out of the last 13 days, or up 9 in a row. We haven't seen this kind of price action, Brian and I, since the old CME and the days before the 1987 crash. The high in the S&P came in at $14.99 even in the big contract, $1,500 even in the mini. The low came in at $14.91 half early in the day, and last we're $14.96 even up. We're up 0.30 handles. Actually, this cash just popped up. We're 97.5 last, and we're up 1.8 handles. That's the way that works around here. Total volume, 1.25 million minis trade, but 200,000 of that came from GLOBEX. So we're seeing kind of low numbers here. 3,000 big S&Ps traded in the pit. MOC, we had 18 of the Dow 30 to buy, and on the broader market, we had 345 million to buy. Tomorrow we got the first day of the FOMC meeting. We've got the Shiller Case number. We've got consumer confidence. We've got a 5-year note auction. Now look at the S&P keeps continuing higher, and I'll tell you what, there's a lot of contrarian views starting to pop up around here, especially based on some of this historical stuff that happened back in '87. Now, for those of you that were around in '87, you remember how Kovner and Tudor and Bacon and all those big guys were sniffing out the sell side in the S&P. Well, we remember it really well too, because we handled all their business back then. We'll see you tomorrow on the opening print.